For like the last decade, the stock market has hit high after high. So what happens to people when the markets do nothing but rise? Or better yet, what happens to people after that's over and the market does nothing but fall? And can they reverse it? Behind all of these events is almost always the Federal Reserve. The Federal Reserve, or simply the Fed, is probably one of the most powerful companies on earth, depending on who you ask. The Fed is either good or bad. But one thing's for sure though, the Fed is definitely very mysterious in the way that they conduct business behind the scenes. So how exactly did this powerful body that makes money decisions for all of us come to be? And why was it formed? And what was banking like before the Fed? So in today's video, let's take a look at the history of the Fed. I love this stuff, so make sure that you like, subscribe, and sit back and buckle up for the ride. All right, so to understand what the Federal Reserve does or why it's even there in the first place, let's go back in time to the 18th century, the birth of fiat money. See, the U.S. first paper money was called the Continentals, and it was printed in the late 1700s to finance the American Revolution. But the Continental Congress, responsible for printing money, became overzealous and printed so many bills that inflation quickly shot through the roof. Eventually, people lost faith in the Continentals, which is how the famous phrase, "not worth a Continental," came to mean total worthlessness. Shortly after, in 1791, Congress set up the first bank in America in Philadelphia. While it was the biggest corporation of its time, it faced opposition from the masses, and after 20 years, it was phased out. 5 years after the closure of the first bank, the government attempted to set up another central bank, but it didn't last long. And then, free banking was born. See, by 1836 and 1837, independent mortgage banks had started to come up. This was actually known as the free banking era. Now, these banks would issue their own notes, which were redeemable for gold, which meant that basically if they printed any money, it had to have gold to back it up. And it was also at this time that the first demand for deposits became a thing. Now, as the Civil War rolled in, the country realized just how powerful the banking sector was, so it sprang into action and started to create a uniform currency. Then the National Banking Act was passed. With this development, banks were now required to back all of their notes with U.S. securities or bonds. This is where reserves that we have now came into play. Now, even though we had the National Banking Act bringing some order to the banking sector, bank runs still persisted. So whenever an unforeseen or an unsettling event hit the news, everyone would run to the banks and try to withdraw their deposits. By 1893, a banking panic led to the worst depression that the United States has ever experienced up till then. It was only then that JP Morgan intervened and stabilized the economy. This was the first time that an idea came of a centralized banking financial system, and it really started to gain attention. However, nothing was done for the following couple of years. It was not long before another financial collapse happened, and this time, the turn of the 19th century in 1907. After Wall Street speculation failed terribly, a huge banking panic followed, and again, it was JP Morgan who came to save the financial sector from a complete collapse. By this time, more and more people were calling for serious reforms of the banking sector. And despite opposition from a section of powerful conservatives, there was growing support for the idea of having a central banking currency that would spread around the world. And it had to be something that would allow for real growth. All right, so in response to the 1907 event, the government passed the Republican-backed AV Act of 1908. This act allowed for the emergency issuance of the American currency in the event of a crisis. And to find a long-term solution for the banking problem, the National Monetary Commission was also set up. The commission suggested a banker-controlled model, but this plan faced a ton of opposition from progressives as they wanted something that had more public control rather than market control. This time, the stage was definitely set for real reform. Now, with the new government being Democrat, Republican Woodrow Wilson, he sought another solution to the banking crisis. And not being financially savvy himself, he tasked Carter Glass, then Virginia's representative, and H. Parker Willis, a professor of economics, to come up with a solid banking solution proposal. By the end of that year, they would present an initial plan that would eventually become the Federal Reserve Act. So debates on the floor commenced in 1913. It pretty much stayed there all year, going back and forth. But by the end of the year, Woodrow Wilson signed the Federal Reserve Act into law, and the Fed was open for business at the start of 1914. I don't know why I was going to say 2000. Now, the establishment of the Fed quickly proved to be a hugely beneficial thing to our economy, as World War I broke out in the middle of 1914. Banks would go about their business smoothly because the emergency currency was now available. Moreover, the Fed started giving banker discounts and even promoting trade with Europe. Now, other events related to the reserve did happen after the war, but the biggest development by far was the Great Depression. The market crash of the Great Depression abolished the gold standard. By the 1920s, the markets were trending on thin ice, and true warnings of a stock market crash became reality in 1929. This period became known as the Great Depression, and it's the country's biggest financial crisis to date. In fact, 10,000 banks were closed in just 3 years in this time. And much of the blame went on the Fed for not containing the stock market speculation and consequently lending too much. President Roosevelt, who'd stepped into office, declared a bank holiday to give the government some space to try to figure out how to get through these hard economic times. And this gave birth to the Banking Act of 1935 that would bring several reforms, including the separation of commercial and investment banking sectors, using the government securities as collateral in the Federal Reserve notes, and the establishment of the Federal Reserve Insurance Corporation, or the FDIC. Most importantly, the placement of the open market operation was now under the Fed. Now, it was also at this time that the U.S. went off the gold standard. So now the dollar was no longer being backed up by gold. This pattern would repeat after the Bretton Woods Agreement of 1945. Now, more reforms pertaining to the Fed structure would continue after the Banking Act. The new feud was actually over interest rates, and it happened in World War II. The Treasury wanted the Fed to maintain low interest rates on bonds to help the government borrow cheaply and finance the war. To do this, the Federal Reserve had to give up control over some of its portfolio, which it agreed to. Then by 1950, the Korean War was in full force. The Treasury, as well as President Truman, still wanted the Fed to maintain the low interest rates pegged to protect public investors. But the Federal Reserve needed to get a hold of inflation, which was killing the economy, running at like 25% per year. And so with a fierce battle began the feud between the Fed and the Treasury on who would control interest rates and, most importantly, monetary policy. Well, an agreement was known as the Treasury-Fed Accord, and it was eventually reached. And the Fed was no longer responsible for monetizing the Treasury debts. It was also had independence now regarding how it would pursue monetary policy. Okay, so it would be years and years would fly by, and we go to now to the 1970s, which we saw another period of tons of inflation. But this time, the Federal Reserve was able to get it under control by the 80s. Also, the progressive acts like the Monetary Control Act of 1980 and
the Graham-Wiley Breach Act.
I can't say that one, but I'm going to try it one more time. And the Graham-Leach-Biley Act of 1999, which paved the way for a long period of economic growth. Now, it wasn't until 2008 that the U.S. economy experienced yet another financial crisis. This became known as the global recession or the Great Financial Crisis. The Fed quickly sprang into action, offering emergency lending programs, implementing dollar liquidity swaps to counter the dollar shortness, and also cutting the federal funds rate. Now, on top of doing all of this, they also stepped in with a program called quantitative easing. Now, these measures did help the markets eventually recover, although the harsh effects of the recession lasted for quite a while, probably almost a decade. Then in 2020, the world faced the biggest crisis of modern times, which is the COVID-19 pandemic. As quarantine measures proved to be the most effective for short-term solutions, the economy activity slumped a ton. In fact, look at this chart. Companies closed down while layoffs were happening worldwide. Unemployment shot up and financial conditions became quite dire. The Fed again sprang into action to deal with this crisis. They turned on the money printer. Now, obviously, since then, we've seen a ton of inflation, and the Fed has been hiking interest rates significantly to counter the ongoing inflation with 4 consecutive 75 basis points increments in 2022 alone. And it's the highest since the 1980s. But there seems to be a reprieve right now, and I think that the hikes in December, like this week, are going to be probably more like 0.5. All right, well, now that we know a little bit about the history of the Fed, what do you guys think about their current interest rate hikes? Do you think they're doing enough, or do you think they're doing too much? I'd love to know. Go ahead and tell me in the comments right down below. And if you guys like this video, consider subscribing, hitting the little notification bell, and we'll see you next time. Thanks for sticking around, folks.